certainly think it's a very interesting and exciting company. And one of my objectives this evening is despite our very significant increase in the share price over the last, I think, year and a half, we still, as management team, think that there's potential for an awful lot more. The low of the share price, I think, was around about 4 or 5p back in March 2009. I think we closed today about £1.86. So if you're one of those lucky people that were in at 4 or 5p, you've made somewhere in the region of 40 to 50 times your original investment. We raised money early in the year at 75p, which was fully funded at that time, and more recently we raised some money in October at £1.40. Again, that was oversubscribed. We actually had to close the book on the Friday because the money was just rolling in. So clearly the institutional investors are very interested in our story, and it's good to see that along with the very strong following in the private investment community, we have a good set of shareholders. We are focused on Kurdistan. We have so far had 2 discoveries, most significant of which is Shaikan, the Shaikan field, the Shaikan #1 well, and more recently a discovery on Akrabajil, the Bajil #1 well. And the Bajil #1 well, certainly smaller than Shaikan, but in itself very, very significant for the company because of the data and information we've had from that. We've had an independent technical report done on the assets for Shaikan, and that assessed the reserves, the oil in place resources, of somewhere in the region of 2 billion through to just under 8 billion on a P1 to P10 basis. What I want to explain to you this evening is that we think these numbers are potentially very conservative, and there's a much bigger story that could be out there, and that's why we think there's a potential for further significant increase in the share price. Now, to back up all the work that we need to do, clearly we need a lot of cash. I mean, at the end of the day, these projects in Kurdistan, and certainly Shaikan, is going to need billions of dollars of investment to develop and ultimately get the oil to the export markets. So having a strong balance sheet to meet our commitments to the Kurdistan regional government and to follow up, on a opportunistic basis, other opportunities in the region is very important to us. That $250 million does not include any revenue that we will be getting from our test production from the Shaikan field, and I'll come on to show you the pictures of the facilities there. That money that's being raised is all going to be focused on proving up resources. And by that we mean drilling wells to find as much oil and gas in the ground as we possibly can. That's both on our existing discovery, Shaikan, and also in new areas. So, for example, we're currently drilling a well on Sheikh Adi. We want to go and explore Berbahar at the early part of next year, and also a further exploration well on Akrabajil. We also have some seismic work which we are currently undertaking, and we're now extending across the Sheikh Adi structure. And I think finally, we want to progress orderly exit from Algeria. Just to get our geographical regional setting, this area here is where we have our 4 production sharing contracts, and roughly a sort of south to northerly direction. Akrabajil is operated by MOL. We operate Shaikan, Sheikh Adi, and Berbahar is operated by the Turkish company Chanel. And as you can see, we're actually on trend with other discoveries in the area. Miran West by Heritage, Tak, which is a producing field operated by Sinopec. Heading further north to Torquay, the DNO operated field. And this field here is what we use as an analogy for our assets. This was discovered Kirkuk back in the early 1900s. 60 billion barrels of oil in place, currently produces somewhere in the region of 400 to 500,000 barrels of oil per day. And that exports oil through a pipeline which heads north and crosses the border into Turkey and into the port of Ceyhan in the Mediterranean. So we see ourselves well positioned strategically in terms of our access to infrastructure to be able to get oil to the export market. That's very important. just talking about the work programme, as part of the terms of production sharing contract, after we've had a discovery, we actually have to sit down with the KRG and our partners and agree an appraisal programme. And from a result of those discussions, it was agreed that we would certainly need 5 wells to appraise Shaikan, possibly 7. And we will, through this work programme, by hopefully if everything goes to plan, by the early part of 2012, have drilled all of the 7 wells which are required on Shaikan and have a fully appraised asset. So we'll have a good understanding of the resource base. Now, a key well in this work programme is the Shaikan number 2 well, and I'll come on to talk about that a little bit later and why it's so important. We're currently drilling the Sheikh Adi well, and again I'll come on to show you the position of this asset in relation to Shaikan and why we actually think it may be part of the overall Shaikan field itself. And then our partners, we want to drill this Barbahar structure. Again, this looks very big. Our feeling is it's bigger than Shaikan, and also a very large structure similar in size to Shaikan called Bekni, to be drilled by Mon. So a very active drilling program over the next year. What we found with Shaikan is that there's lots and lots of different geological horizons in which we find oil. So we build this horizon, we encounter hydrocarbons, we then test it, and so you see, if Sheikh Adi is similar to Shaikan, and the same with Barbahar and Bekni, a series of announcements. So it's not just the time it takes for the well, roughly 6 months before a news announcement will come out. We'd anticipate that it will be a sort of continuous news event once we get into the interesting geological horizons. Just coming on to Shaikan, our working